Hello and welcome to another episode of Frugal Finance. So we'll just do a quick portfolio overview. It's been a little bit sad in the portfolio this week. We've gone from around about a 4 or 5% return down to 2.15%, and we'll touch on why that's happened in a minute. Pi wise, we're looking at 3.92. That has obviously gone down, and generally speaking, most of the investments are not doing too bad. But you'll see there are a few that are contributing towards this particular lower return, if you like. So we'll just quickly get on into that. So the number one contributing factor is actually Lucid Motors, which, as you know, I've got a rather large shareholding in them. And what's happened with Lucid over the last week is that at this point here, so on Wednesday the 1st of September, that was the 31st of August. That was the point where what we call the pipe investors were allowed to withdraw their money. So we're what we call retail investors, and we buy the share at whatever the share price is. So, for example, it closed on Friday at $19.57. What happens with new public offerings and SPACs and all that kind of stuff is that institutional investors, so the big pension funds and the big boys that do all the investing, are allowed early access for a fixed price. So, for example, with Lucid, the pipe investors were allowed to come in and buy so many millions of shares at $15 a share. And basically, that means that they're almost certain to make profit on it in theory. However, they can't sell their shares until a certain expiration date. That's where this date comes in. This is expiration date. So as you can see, the price plummeted a little bit, around about 12-13% on 1 day return, because the pipe investors were suddenly allowed to withdraw their money. And obviously some of them did. They took their profits. Some of them have left it in. And as you can see, broadly speaking, it's kind of just about recovered to probably where it was on this sort of general sort of downward trend at the moment. I think there's obviously a lot of fears of inflation. The jobs, unemployment rate in America wasn't particularly as good as people were hoping, in terms of less people being unemployed. And that has caused all of this really to crash. I mean, at some point during the week, I think we were down about 22% on it. So pretty big crash. And as I say, it's recovered a bit now, because you've got this combination of, obviously this is a volatile stock anyway, and then you've got the pipe investors withdrawing their capital. So hopefully that will sort itself out in the next few weeks. Obviously good news is Lucid are trying to get their first vehicles out, so that should help the stock price once people see that they can actually produce a car and get it out on the road. I think they're very close to that. I'm sure there's loads of YouTube channels covering this, almost dedicated ones. So if you want to do that, go and check any of those out. Just type in Lucid Motors or something, and I'm sure something will come up. American Express, pretty much flat now, was trading at a bit of a profit for a while. I like American Express. I use my Amex card quite a lot. I do believe in the company, so I'm really not that bothered about that. That's market fluctuation. I also think in the UK it is one of the easiest, or not the only, but one of the easiest cards to get. Sorry, which actually gives you cash back. Or various rewards and things. And I do think as we enter into this kind of next 10-year frugal decade, as people keep calling it, I think that people will definitely be looking to see what value they get out of their cards, utilities, all that kind of stuff. Apple holding strong. Coinbase, obviously, that's been pretty good return. I got lucky. I bought that kind of really at this low point here, not on IPO date, as opposed to like Robinhood, which I did buy on IPO date and has gone up. Nvidia has always been strong, but I don't really have a large holding in that. And you can see PayPal, Pepsi, and the rest of it. And you might be wondering why there's less stocks in here, and that is because I have clicked this button here, which allows me to basically remove the pies from the main investments. Otherwise, it just the list just goes on and on and on and on. If we want to look at the pies, you just literally go in here and go in holdings. Pie wise, I know I haven't done an update this week, but it's pretty standard. And as I always said, it kind of performs like an S&P 500, except for it's only 50 stocks. Well, actually, dividend wise is interesting because we've just broken through the £50 barrier, so that's quite nice. That's generally speaking, that's about a 1% return just on dividends. So that's pretty good there, and that doesn't include the dividends that I get from these particular stocks where I've put individual money in. So you can see here generally things like Square, Robinhood, Starbucks, Tesla, they're all up. Uber's been on a bit of a downtrend. I've just been trying to dollar cost average into that. Pretty much like what I did with Lucid, to be honest. I bought 20 odd shares in it when it was down. So yeah, I think that's kind of the overall portfolio update. I'm hoping that there'll be some stability in the market soon. As I say, I'm only a guy on YouTube, so please don't just copy me and think that this is some sort of like excellent idea to do. You need to do your own research, really. I'm literally just sharing my journey. Think of this as no different to some mate or a geezer down the pub or the bar, wherever you are in the world. Talking to you about their portfolio and just showing you what they've invested in. It's not financial advice. So don't forget to smash the like button. Please do subscribe to the channel. Don't forget to share the video if you do like it. Comment below, all that sort of stuff. YouTube loves a bit of that. We are slowly creeping up in numbers of subscribers, which is nice to see. Don't forget, I only do this for fun. I just like to share my journey and give people an insight and hopefully encourage them to live their fullest life, whatever that might be. And on that note, I shall see you next time.